Hear ye. Hello. Okay. So, so the forecast for January 8th, I intentionally left it this way because you can see that when I defined this as the risk zone, and this was a strategy, but you can see that it didn't follow through with that. Instead it fell through the support and hit this target, which is one thing I said might happen. This risk here, this has a risk zone, and then this has a reward. It hit this, and so this failed, and this intersection here you can see was a retracement here, and then tried to go up but then failed. So there was no plan for that at all. So it failed to this support. Then this would have been a support. Sorry. This range here is about 14 pips. This one is about 30. Well, it's about also 14. So, but as it was converging, the more time as it's converging, you can see that either if it's on this side, it was probably going to go down and go through, which you see a free fall here. And it doesn't follow through with that either. Instead, we get something by, what was it? By the start of the New York session, I think, the end of the UK session, the start of the New York session, somewhere on there. It appears to have turned around. So this is probably, this is the end of the Asia session, beginning of UK session, and then beginning of New York session here. It drills into the other direction, into buying. So you can see that the retracements are matching these support zones. But other than that, are these support lines. But other than that, it didn't follow any profitable pattern that I was expecting on this day. So what I did is I left the lines here. I let them sit to demonstrate something else that happens on the longer term. And on the longer term, whatever day that you set these lines on, you can use them as trend projections for longer term trend projections. So in fact, you can see that you can measure the risk and the reward the same way, the risk and reward regions the same way. And you can tell, like also I said that there was a channel here, and you can see that over the next days, the following days, that the price followed this channel. You can see that it happened all the time this day. There's a retracement low here near this support line. And then on the day after that, it kept following that channel until price fell at this time. I believe this is about the start of the New York session right here. Of the New York Open, it fell. What is this? 100 pips to the support, touching the support trend, the support trend. So, and the amount of pips that it just, like that I had, that it just, these are averages, these are approximations, but you can tell there was just a few pips away from actually touching that line. So, and then it closed the day around there. And then again, you have a retracement here, which the high of that was this resistance trend line. And yeah, so I think at this point, I would prefer to. So what happens is I could let these trend lines sit until I think that the price doesn't, that they don't reflect the price's direction much anymore. Doesn't reflect the price anymore. That would become obvious where the shape of the market doesn't fit the trend shape that we have, the trend pattern that is here, these lines. But right now it appears that it's still fitting it. But I think that this is also effective enough for you to see that because just because you didn't get something out of this day's pattern, that there's actually a longer term. The pattern is still effective over a longer term, and you can actually just let it sit for days and get something else out of it. So that being said, and now that you have actually seen that, I'm going to change to the new day. Yeah, I think it's important to keep an eye on the longest term ranges. These ranges actually, these time ranges actually, I think the market is looking at. So we know that the algos are doing most of the trading, but they are still influenced by humans. So whatever major decisions or whatever is happening, I do think that you still have to be experimental and observational. And my experiments say that these time ranges are still being used. They're still observing them, and they're still trading off of these structures. So they still operate as windows into the market. So this is the highest time range here, time frame, and you can see that clearly there's an upward trend here. So if I'm looking at these other downtrends that happened, like in other words, what is this 90? This is 90, 85, and this one is 2000. What's that? 15 years. So this one is another 15 years. This would be 2015, which is probably that one, right? But we still have some downtrend happening here. So, but anyway, if you look at the downtrend, there was a slight. This appears to be a slight retracement here. Does have other retracement, but usually these downtrends were very thin, very fast, and very thin and very smooth. You can see compared to the uptrends, right? But this downtrend has been very choppy, very wide. So I don't think it has been. This is, and that's after 2008. So I don't think this current downtrend is reflective of the past two cycle downtrends. There's a lot more choppiness going on here, and I'm not sure what's happening there. But anyway, you can tell that there's that most of the trends still show this strong downtrend inflection, and this is about 45 degrees, right? So most of them are less than 45 degrees, which means it's a very strong downward inflection. So that's what to expect in the near term. And so if we zoom in again, we can see that there is attraction to you have these resistance trend attractors or attraction. But in the short term, these are months actually, these ranges here, and it is in a 5 out of 7 trends. 5 of the shortest ones, also the shortest ones, are showing a very strong downtrend, and 3 out of the 7 are showing this very, very very strong downtrend, almost to 90 degrees. So in the short term, I would expect that there's very fast, very strong selling. We can continue to see that. You can continue to see that as you zoom in. This is a one. The 1 week. I'm not sure what that was. What was that? 1 year? I don't know. What is this? I'm interested to know what this range is anyway. This is 24/1/21 to 24/12/29. That's about a month. So the weekly and the daily window are still about 1 month. Is it? Let me check this again. 22/11/20, 23. No, this is 1 year. This range is 1 year. Okay, so even this year we have a very strong downtrend inflection for the year currently. So for the month also, we're on a very strong downtrend inflection, and because the in the short term the inflection is so strong, there's not much information to get until we zoom in a lot more. So this inflection here is this region is 370 pips. This reward region. Obviously that's out of range, so we're going to be looking at these regions. Okay, on the 15 usually I can see something. So well, okay, so on this region, obviously, let's see if I can go back in there. Okay, so we see that there's nothing above here, right? So these two regions here, these will be, well, this definitely is a risk region, right? The smallest regions will be the risk regions. So if it enters into here, this is a risk region. It means don't try to trade anything in here. If it is on this side, then you can try to use this as a target, and that would be 18 to 15 pips. At the end of the day, more towards the end of the day, you're looking at 13 to 26 pips. This is a bigger region, so this is a reward region compared to this. These are both, I would consider both these risk regions to this one. So if price is on this side of the market, you'd be looking to use this as a reward region and this as a risk. So usually a price is trying to balance itself here, but it looks like it already did that during that day. So this could go either way, but if it's under this line, if it doesn't reach this line, I just won't trade this. It could just go up, attract to this line, starting at the beginning of the day. It could just, go anywhere. It could just keep going down. So I would wait until it comes up to this line, and then you could, when it does, then you could sell it again down to this as a target. If instead it crosses into here, then you can sell from this line and use this as a target. If it enters into this area and crosses this line, this region, here you can buy this and use this as the risk, the stop, and then just buy it until wherever it's going. But at that point, it's already about 50 pips. It's already about a 50 pip range, which is almost the whole day. And I mean, even yesterday, which had this big move here, which is about 100 pips. So I don't think tomorrow is going to be it's going to be more like short range trading. It's not going to be long range trading. That's what I think. So anyway, if it hits this line, use it as a sell to target this. If it hits this line later in the day, when this region is bigger than this region, use this as a sell to target this. If it hits this line, then you're not going to do anything. You're going to buy up into any type of free range trading up here. I don't suggest it's probably not going to have a lot of range left after that, price range left after that, or you can wait for it to return back under this line and then hit this as a target again. So overall, it would be selling, wait for it to hit this line, sell this as a target, or wait for it to hit this line later in the day and use this as a target or this as a target.